Welcome to Trading Lounge and the daily US stocks for Monday, February 28. And just to keep things very simple, we've either got wave 4 completed or we'll be going into a larger wave 4 here. Now the S&P, a lot of stocks, even Bitcoin is producing an impulse wave to the upside here. Okay, so that means that after an impulse wave, we'll get a correction and then we'll get another move up. Now, the other move up will either take us up into a third wave and go, much higher, or we'll end up in a B wave. Now, the B wave here, I've just got it as an A and a B and a C here for wave 4, but all of this could be an A, B, and a C for the A wave, and then a B wave, and then a C wave down. Now, this B wave here, that's at the 78.6 from that top to that bottom, but we may end up being higher at the 78.6, so having a bit more, equal to this situation over here. So we just, anything is possible. We don't know everything, so that means we need to be cautious. It's not like we're in a trend and we're getting some sort of pullback and we can see that it's corrective and we can move in and those sorts of things. We could still be in the middle of a wave 4 correction. That's the bottom line. So we just need to work through. So I think, we talked about going long in some stocks last video, so we can pick up those and continue with those. But yeah, look, that's the story. So it's not easy, but so it brings it back to the question of, depending on how you trade. If you're an intraday trader, it doesn't make a lot of difference what the market is doing in the bigger picture. But if you're a position trader, then obviously it matters, and you'll need to manage your exposure and not over trade until we're clear in our direction. Now, obviously, we can see that the indicator here has given us they're a bit lagging, but it's sort of setting up nicely. But even so, when it's set up here, it just sort of went up, higher and then sort of rolled over, so they can do the same again. But it does produce a little bit of confidence in all of that. So that said, let's go in and have a look. So on the 100 ticks, I think, for this. So we started counting this up on the Friday, and the bottom line is in the bullish weekly cycle that if Friday closes strong, then Monday's likely to follow through. Now, it did close stronger, but it wasn't that strong. And as I mentioned, the range in the daily bar was smaller than the previous one, and also a lower volume as well. So we've got a couple of resistance areas here. I'll just put that as a wave B just to keep things simple. And yeah, so this is, let me just get in some more data here. Yeah, there's plenty. So I'm going to put that as a wave C as well. So we're either going to fail up here, or let me double check on that. Let's make sure that that's right. Just bear with me a second. I don't think it is. I think it's higher. Well, that didn't pan out very well, did it? Let's just get that out of the way, and down there and there. So that is higher at that point. They were just taken from those two highs, so they're important, so I'll just leave them there. Let's just put in, this is the one here. So we can get up to 172 here and fail at that point. I wonder if it helps us put a trend line through here. Maybe. So this scenario really is all the way through the markets, the S&P and the banks and so on and so on. We've either got lows in place, or we'll be pushing up higher into in this case 172, the supply here. We're going to get resistance here anyway. and then you know, see ourselves come down at this point. We won't be coming down at that point now. Now this here, what have we got here? So we talked about being long on that level, so we don't need those. Don't need that. That was that one. It's gone. So we can count that as 1 and 2 and 1 and 2. That would be, let me just double check, 1, 2, 3, 1, 2, 3, 4, 5. So that's okay. That's okay. That's 1. Oh, it's 1. Okay, 1 and 2, 1, 2, 3, 1 and 2, 1, 2, 3, 4, and 1, 2, 3, 4, 5 to that point. Oh, that's interesting. That seems to be a bit. It's extending. That's too small to be that wave 4, so we've obviously got something going a bit higher here. So I'll just let Monday play out. One of the good things here that we can work with is we talked about the 160 before. We don't need that. The 165 here is important, and that's part of group 2, minor group 2, so that's 80 and then 72 and 165. So it'll be interesting to see if it climbs in at that point. So look, in a nutshell, we're looking for the 5 waves to finish up here. I mean, I should be putting wave 4 over here, but it's just a bit small, so I've counted something wrong somewhere. I just can't see it. I'll just leave it small for the time being. That would be 1, 2, 3, 4, and 5 coming up here. So that will take us up into that space, which is also, these are all 61.8% as well. We don't need that one. That would be from that high here. And then the other one, this one here, is from this high here. And of course this one's from the other high. So there's a lot of things going on in here, but what we'll do is we'll just stay with the once we get to this 5 waves here, then we're going to get some sort of correction back here. Now technically it can come back 61.8%, so I'll take it from there. So it can pull back to here, so you'll need to decide if you've got a position in here and what you're doing with it and so on. But I'll just play them. I think even taking, let's just look at it as in this box here, let's just take a percentage off the table at minimum, you know what I mean, at minimum, and then we can try to get back in over here and we can trade up to this point and track those 5 waves and then basically get out at that point and then use the 72 to get back in, or the once the 5 waves have completed, then we'll work it on that side. Now I'll just go to yeah, no, nothing else to glean from here really. It's just another chart, the same thing. So in a nutshell, we're tracking. Well, once we have a look at the I haven't looked at the S&P yet, but once I get that established and some of the other markets. So we're looking for 5 waves up and a 3 wave move back, and then we'll see what gets delivered at that point. I mean, if that's going to be a 3rd wave, we want it longer, but that would just be wave 1 and 2 within that space, or coming into these highs or something of that nature. So anyway, we've just got to get past a few things. But yeah, anyway, just explaining the trap. This is where it can unravel from at that point. So okay, that's Apple, and it's pretty much the same story across the board really. Now with Amazon here, I could look at this being the A wave, the B wave and the C wave in here and finish, and still look at that as wave 1 and 2, which we have been looking at. We'll continue to do that. looking for another low here, but I can see that this needs to move up here, so I can still view this as an A wave, a B wave, and a C wave up here in 5 waves, or WXY, or any sort of corrective pattern really. But it can move up higher and then drop back down. That's the main, that's the takeaway of it. The other side to it is that the market just continues to move up at that point. So let's just have a look at the 100 ticks. So with the 100 ticks here, we've got wave 4 over here, even though I've got it as an ABC. We've got wave 1 here with an ABC for wave 2 here. And then we need to look at this as wave 1 going up here. We also looked at it as wave 1 and 2 at this point here, but it's above the 61.8%, and it's also looking impulsive rather than corrective. So we can put these back over here. We don't need those. May have talked about being long here, but we'll just wait on that now. I mean, normally that would be, the arrival, the reaction, the first high above the level, the correction, and then moving up from that point. You may have done that. That's okay-ish, but what we'll be looking for, we know there's a top coming in soon, so we'll look for that top to come in. We know that the range on Friday was smaller, and probably on lower volume as well. So what we can do is just really wait for that that sort of retest at that point, and we can look at it at that point. You could also look for a classic trading levels pattern on the 100 as well. There will be resistance there, so you could also look to move in on that space. But I think we should wait for this whole thing to clear up first. But day traders can do that, of course. You can work a classic trading levels pattern pretty much on any number, really. So that's where we are with Amazon. So we're just going to wait for the pullback there for that 5 waves will finish off. And Alphabet. So with Alphabet, we can also call a low in, but also too, we need to be mindful that it can get more complicated as well. So we'll just need to I'm just going to use that high because it's the highest. Also a shorter range here as well from that, so we know that that's ending. We know it's going to fold back at some point. We know it can go a little bit higher, so it'll be something like this if it's going to fail and then come back down and have some more complicated correction, or we can call wave 4 in here because we can count 5 waves in that space pretty easy. But it's just everything, because everything's going to move together but in its own way. But this will be, this is the fear that I have, is that wave 4 is not completed, and we don't want to get we need to be aware of it. We don't want to be lured into into sort of a positive security that we end up over trading at the wrong time here and just get hammered at these points. So once again, we're looking for that 5 waves up in this first leg, and when that pulls back, and then we can get in, and we just need to be careful how we go up into this point. But yes, it can go up from that point. Let's just have a look at the tick chart, 100 ticks at least. So yes, I was looking at it. We can label it as the A, the B, and 1, 2, 3, 4, and 1, 2, 3, 4, 5 here, and then moving up for 1 and so on. Let's just have a little look at it looks nice and impulsive here in this space. I'm just going to go to 5 ticks. So I started to count it up from the low here as 1 and 2, 1, 2, 3, 4, 5 for 1 and 2, and 1 and 2, and then 3, 4, 5 for the third, fourth, and fifth. So in this case, we still need to get it. We'll probably hit the 272, and then the 4, and then the 5 here, and then we'll have an ABC pattern going on here. But we're coming into the thing I like about this is that we're in the 50-60% retracement level, and if I'd only got 3 waves to this level, then I'll know we'll be corrective. But it does appear that we're getting 5 waves, but it ain't finished, and so we need to wait for it to finish. And we don't want to rush in at the end of the trend. I know that's the normal emotional thing to do, but we don't want to do that. We need to be patient. We need to now wait for it to finish and pull back, and then we can move into it. So in this case, I think we've got 1 and 2 in here, because it just depends on how close it gets up here. If it does something weird and just has 1, 2, 3, 4, 5 here, and then pulls back sharply here, well, then we've got an issue, because then we'll end up having an A and a B and then a C wave up to here, and that would call it corrective at that point. So that's an issue. So we just need to, I'll just go back to the 100 ticks here for a moment and just sort of look at that a little bit more here. So what I'm trying to do is to get 5 waves to here rather than sort of 3 waves. That's the deal. Then we'll sort of have a better idea of what's going on. Of course, if we get a classic trading levels pattern on the 61.8%, well, then we'll be more in a bullish pattern at that particular point in time. So I'm just taking the same story through all the stocks, because they're all moving together off the lows, so they're all going to move. They're all going to, if the market's going to roll over, they're all going to roll over. That's as simple as that. The same with Meta as well. This is my old count here. The other count that we're looking at is just taking this wave 4 here and putting that up here somewhere. Once again, here it appears that we're getting 5 waves up here. We're not quite finished yet. I think that this has got a little one. Look, 210 here, look for a classic trading levels pattern. We've got the arrival, the reaction, the first high above the level. That can go a bit higher than that, and then the ABC pattern. So the arrival, the reaction, the first high above the level, the ABC pattern, and then onwards from that point. So we'll just wait for that. The other pattern that we've got here is more bearish, and that's on the daily chart, which is looking for wave 1 and basically looking down for an A wave here, and then a B and a C. Now in that case, we've got 1 and 2 and 1 and 2 and 1 and 2. That fits quite nicely, and then the third wave all matches in. Do you know what I mean? It fits quite nicely, but it's not in line with the rest of the market, but it kind of could be, I guess. We'll see. But in this case here, I talked about buying above the 200, so you may have done that. So we're pretty much looking to come back to the wave 4 of 1 lesser degree in that space. So in there on that. So yeah, still fair way to go. Do you know what I mean? So that's all good. And Microsoft. So with Microsoft here, we can end up doing the same thing as well. Once again, I can look at it as an A wave, a B wave, and a C wave here. A little bit rough to get your head around, I understand that. We also need to consider the same story again. So taking the low at this point and looking for a move up into the 50-60% area up here for that. And let's just... So in this case, we can look at it here. This is where we also need to be careful. We'll get 5 waves up here. Obviously, the 200 is going to, give us some resistance there. So we could end up with something like this and then down at that point. That's what sort of haunts me at that point. But otherwise, this counting down as an ABC, I mean, I'm okay with that. I think we've got something on the 2K here. So it's a bit of a long shot, this one, but I kind of like it as a wave 1 here and wave 2 over here, and then 3, 4, and 5 here. The ABC here for this, and then 1, 2, 3, 4, and 5 here. So a bit of an overlap here, but yeah, I mean, we could label it a WXY, it doesn't really matter, but we're still left at the same thing. You can see that we've got wave 1 here and 2 here, and we're going up for 3, 4, and 5 here. This is what we need to figure out here if we're going to get that and that and that, and then either fail from that point or continue up from that point. But you know, the thing is that because we got 5 waves here, the good news is that it's going to pull back. So that means we can trade this leg here. We just don't know how far it's going to go. Okay, so let's move on to Tesla. The same thing with Tesla as well. We're looking for our original count was the A, the B, and the C all the way down here to 720. Now the thing is here, it looks like we've got 1 and 2 here, and the third wave and a fourth wave and a fifth wave. But I had a closer look at this. We can get 5. We can get 1, 2, 3, 4, and 5 out of this. But the same thing here again. But I'm a bit more confident we can just sort of mosey on up with this. But of course, we just need to be aware of any turns in the market. Let's just go to start with 100 ticks. So obviously we've talked about this here. We've talked about having wave 3 here and 4 here. And yes, but even with wave 4 here, because I can count this, I suppose I could do that. No, could I? Yes, that wouldn't count like that. It'll count like this if it was going to finish there, because I can get wave 1 here and 2 here, and then 1, 2, 3, 4, 5 here for the third wave, all of the fourth, and the fifth wave, then the ABC here. But obviously it looks like that could be, and because that's 5 waves in here, 1 and 2, 1, 2, 3, 4, 5, third, fourth, and fifth. So there's 5 waves from that move to that move. It's either that or we've got an extra one up here. But if we're going to get an extra one up here, we could look at that as the A, the B, and the C here, and then look at that as wave 1 and 2 here, and then that will take us up to 3, 4, and 5 here to have a top in here. So that would be, in that case, that's either going to be wave 1 or it's going to be wave A at that point. So that's what I'm thinking. If you go long here above this high, we've talked about, well, I think what we actually talked about was going along above this one, but now we can bring it down to this one. You could bring it down to this one, but nice to see how the market starts, but I'll leave that up to you at that point. I just want to leave the stopper out of the way here for the time being as well, just in case we get some weird thing that sort of clicks us in here and then comes back as a wave 4 here and then goes up. Do you know what I mean? I see that with this market a bit, so just being a little bit hesitant. So I'll just leaving it under group 2 here at this point. We've got this on the 1000 tick as well. Let's just check out what we got there. Okay, yeah, right, this is the other way I counted it up. So this is why I can count it down here with wave 1 here. Well, first of all, the A wave here, and then the B wave here, and then I'm looking at this as 1 and 2 and 3 and 4 and 5. And I know it's overlapped here. I know I'm putting lipstick on this, but we could also look at it. You could also WXY it as well. It doesn't really matter. But this wave 1 here and 2 here, and then looking at all of this as wave 3, 4, and 5 coming down here for this. When I count this up on the tick chart, I can take that to wave 1 and 2 there I just mentioned, and then as I mentioned, we've got 5 waves in here. So in a bullish candle, we're looking at this as 1 and 2, and then 1 and 2 here for this. So that's how that would play out. But obviously that needs to be confirmed because we need to see this push up quite strongly here. We are looking at being long above here on that, because to me this is a really good setup here. You know, we've got everything that we need here in a way. A bit of a spike there, that always concerns me. So I could look, if I forgot about the spike, I could look at this as the arrival here, and then the correction, the arrival, the reaction, the first high above the level, then the ABC pattern here, and then moving up. So, but yeah, I think that, you know, at some point you've got to let the trader take his trade setups, and this is a trade setup to me because it's support on the closest largest number. You know, we could have done that on the 750 here or whatever, you know. So yeah. Anyway, that's that. There's half a silly chance that this is in here at the moment for this. I could see. I could just saw another way I could label this as well, but it still doesn't matter. It still leaves us with this low in here, and the question is that low valid? You'd have to think that, you know, looking at wave 1 here and the extensions in wave 3, so basically wave 1, that would leave wave 1 and wave 5 at roughly the same length, you know, so that's all good at that point. I was actually looking at wave 4 sitting here as well, with a B wave here and a C wave here. That kind of works as well. Anyway, just not to matter. We just got to work this current situation here. So this move up here counts a little bit differently than the other markets. Alrighty, and Square. So the market's popped up here, and it's also looking in 5 waves. So I thought about this over here, and from this point I can look at this as 1 and 2 and 3 and 4 and 5 for the third wave, then an A and a B and a C and a D and an E wave over here. I feel okay with that, you know. I don't feel like I've forced it or anything. So I think that's sort of interesting, and that leaves us a nice 5 waves down here. So we need to find a way in here. So that means that we need to get an ABC correction, basically. So I'm just going to forget that for a moment. Now this can move up a bit further and all the rest of it, but let's just put in our levels here. So we've got 10, 20 and 30. So if 30 becomes the support, then we know it's leaving the 100 at that point, and that's really important, you know. So, but what we're looking for, I won't look for it right now because I know that we've got sort of 1, 2, 3, 4 up here, probably a bit more to go. What I'm looking for here is just the simple ABC pullback here. Once we've got that, then we know that we're on the next part of the trend, and we can look to buy the pullback here, because there's a good case for being 5 waves up here for this. So that's looking very good. And so this is Goldman's. I'm just going to start using this particular charting program rather than the other one, or can use a bit of both, but yeah, I just started sort of working on it. I did notice, looking at these guys, is that Goldman's and Morgan's, JPMorgan's, they kind of got the same pattern, where the Bank of America is sort of out of sync a bit than these ones. So I thought that was kind of interesting. I might just have a quick look at that, actually. Let's just... So if I have a look at Morgan's and the other one, just got to scroll through until I get it, and a Bank of America. So this is, it's just 10 ticks, but it takes us back, you know, if there's 202 here, so it takes us back a fair bit. So yeah, I mean, in this case, I could look at wave 1 here, and then 2 here, and then 1 and 2, nice third wave in here somewhere, and then 1, 2, 3, 4, 5 at the top here. So we could label this 1 and 2 and 3 and 4 here. Overlaps a lot here, doesn't it? But we've got 5 waves here. So we could look at this. We could look at this as the A wave, which is why we're here. And the B wave, and then 1, 2, 3, 4, 5 for the C wave here. So we can have a low in place there for that. I'll just put that wave 5 there. I mean, obviously this can, an ABC here can just be the A wave, and then we go back up for the B wave as well. But what I want you to do is just have a visual look at this particular move here, and then when we see JPMorgan's, it's kind of different. It's different, you know. It's you can see this one here is like this, and then this one is like, they're same but they're different. And this is Morgan's, and so Morgan's is very much like Goldman's. If I can just squash them in there a little bit, so we can see that Goldman's came down, up, and then down again, and that's here, that's up, and then that's down again, but the top is in here, so it's got this, this, and this, and then it's got this move here, which is the same as this move here. So these two, Morgans and Goldmans, are basically quite close to each other in terms of their patterns, and Bank of America is slightly different. So once again, we can look at these as the A, the B, and the C wave here. We could force 5 waves out of this, but the wave 2 it hasn't made a new low here, but it's come back quite close to it. So this is one of the cases, you know, that yes, we can see 5 waves moving up here. So yeah, I mean, I'm trying to figure out what we have here for this basically. So we know that we're getting 5 waves up here. We may just get get the pullback and then get another shorter 5 waves hitting supply here, and we can go down again from this point. I mean, it's not like Morgans here or Goldmans have given us a nice A, B, C here. This is pretty sharp, and also, you know, the wave 2, if that's a wave 2, it's come back quite, you know, deep in here, which hasn't nothing's broken any rules here, so it can go up from that point. But we just need to be a little bit careful about these guys, you know. So I've got this one here from the top here. I can count that to 5 waves here, in here as 5, but we can count it correctively as well. Doesn't really matter that much. But 3 waves here for this, and you can see that we've got 5 waves here in this move here. So we could look at it as I mean, it hasn't made a new low, but it does appear that we've got 5 waves here coming to the downside here. This is the one that I counted. So it's sort of a bit curious of what we've got here for this, and this is one of the markets that can easily have a bearish scenario into play here, much sort of a bigger bearish market. So I need to do more work on this, but yeah, so if you're long in the banks, just be a little bit extra careful. And first of all, we need to see, you know, that we get 5 waves up into the box here, and then when it pulls back, we can go long on the next 5 waves. But how far does that actually get us is the question, you know, because all of this here, I don't, you know, I mean, it would be nice to be able to count it as 1, 2, 3, 4, 5 here, but it's a little bit high here for that. Yeah, so, you know, we may have all of this just as the A wave here, or WXY or something or other. But just to let you know, I can count 5 waves here. So it could put in the low here if I looked at it as an A, and as all of this is the A wave, the B wave, and the C wave. It's rather sharp. We just need to be careful, that's all. That's all I'm saying. And then in terms of trading, then we can see that obviously this would be wave 1 here and 2 here, and this would be the 3rd wave. So there's probably a 4th and a 5th to go up here. It won't go that. If the extension's in wave 3 here, then wave 1 here and wave 5 are going to be roughly the same. So we'll let this, we won't chase this. We'll let this finish off here. You know, let it do its 1, 2, may have already started that in there, and 5 here. And then we can look to get this ABC back here. And we can trade the B wave long, or we can buy the pullback deeper here. If I can clarify a nice 5 waves within all the banks, then we can buy lower at that point, you know, and build in, so we can work all of that. But just saying that we need to be careful as the A, the B, and the C moving up here. So yeah, it's the same sort of story with the S&P, and be the same with the Nasdaq to a point, I think. So yeah, are we out of this summarizing everything? You know, are we out of that wave 4 that we've been, you know, working into at this point? I don't know. You know, possible the S&P was going to pull back to the 4,100. It's done that. So it's possible, but we just need to be careful in some of these markets, that's all. Alrighty, thanks for tuning in. Cheers.